Today's financial market update. The most important market insights and investment ideas you need to know. Market sentiment is bullish, mild. Market is performing well across major indices. Index performance, S&P 500 at 0.22%, Dow Jones at plus 0.21%, NASDAQ at plus 0.29%, Russell 2000 at plus 0.43%. The stock market shows a neutral sentiment, driven by mixed earnings and macroeconomic influences affecting investor confidence. The neutral market sentiment suggests cautious optimism, indicating that investors are weighing potential growth against existing uncertainties in various sectors. Consider allocating funds toward technology and telecommunication stocks, particularly those showing promising growth and strong product innovations like Sparkle Technology. Riverside County is considering a 3% increase in trash collection fees for unincorporated communities. This fee increase indicates that local governments are responding to sustained inflationary pressures that impact service delivery costs. Consider investing in waste management firms that have robust pricing power to absorb rising costs without losing customers. Millicom International Cellular reported a Q4 2025 EPS of $1.50, reflecting a 15.7% year-over-year growth. Strong earnings from Millicom and Regions Financial indicate a resilient financial sector, which may bolster investor confidence in banking and telecom stocks. Consider increasing exposure to financial stocks like Regions Financial, as strong earnings could indicate continued growth potential in the sector. The effective federal funds rate, EFFR, has stabilized at 3.64 from January to April 2026. The Fed's decision to maintain a stable FR signals a cautious approach to managing economic recovery and inflation risks. Consider increasing allocations in real estate investment trusts, REITs, as lower rates may boost property demand and valuations. Positive corporate earnings from tech giants have raised investor confidence in the overall market outlook. The upbeat earnings from tech firms signal a potential rally in the tech sector, encouraging investors to consider sector-specific investments. Consider increasing exposure to tech stocks, particularly those showing double-digit growth, to capitalize on market optimism. Major tech firms such as Amazon, Meta, and Oracle have announced significant layoffs, with thousands of employees affected. The layoffs in tech indicate a restructuring phase, suggesting firms are prioritizing efficiency amidst a competitive AI landscape. Consider increasing exposure to AI-driven tech stocks as their potential for growth remains strong amid ongoing market interest. Ukraine's recruitment efforts reportedly include drug addicts and ill individuals, indicating significant challenges in military manpower amid ongoing conflict. The recruitment of vulnerable individuals by Ukraine may signal desperation, potentially impacting military effectiveness and prolonging the conflict, which could affect investor confidence. Consider diversifying investments into defense and military-related stocks as geopolitical tensions escalate and nations increase their military expenditures. Oil prices increased by 2% recently, driven largely by rising geopolitical tensions surrounding Iran's activities. The rise in oil prices indicates a heightened risk perception among investors, prompting a reevaluation of energy sector exposures and strategies. Consider allocating a portion of your portfolio to energy stocks, particularly those with strong fundamentals like Saudi Aramco, to capitalize on rising prices. ByteDance is significantly increasing its 2026 capital expenditures by 25%, allocating $30 billion towards artificial intelligence investments. The increased capex from ByteDance signals a robust commitment to AI, suggesting long-term growth potential in this sector for investors. Consider allocating a portion of your portfolio to AI-focused companies like ByteDance, which are likely to benefit from increased investment in technology. Viridian Therapeutics raised $359 million through $250 million in 1.75% convertible senior notes due 2032 and equity offerings. The diverse funding strategies exhibited by these corporations reveal their adaptability in navigating current inflationary pressures. Consider investing in high-quality corporate bonds from issuers like Hilton to capitalize on their sound financial strategies and attractive yields. Major tech companies, including Amazon and Meta, have initiated significant layoffs, impacting their workforce and associated real estate. The current wave of tech layoffs signals potential distress in commercial real estate markets, particularly in areas heavily reliant on tech tenants. Consider diversifying real estate portfolios by including properties not directly tied to the tech sector to mitigate risks from layoffs. Apollo Global Management is acquiring Emerald Holding and Questex for a total of approximately $1.5 billion. The significant premium offered in the Emerald acquisition indicates strong investor confidence and favorable market conditions for private equity transactions. Investors should consider exploring opportunities in the event platforms sector, as the recent acquisitions indicate robust market demand for B2B solutions. Victoria's Secret is searching for a new director with expertise in technology and AI following Mariam Nafisi's resignation. The search for an AI-focused director at Victoria's Secret underscores the increasing integration of technology in corporate strategies and decision-making. Consider investing in companies like Equinix, which are actively leveraging AI to drive growth and operational efficiency in their sectors. Tech giants like Intel, AMD, and Micron have experienced stock increases exceeding 10% due to advancements in AI technologies. The rise in tech stocks reflects growing investor confidence in AI, suggesting a bullish sentiment towards technology-driven sectors, including crypto. Consider diversifying portfolios with tech-focused ETFs like DRAM to capitalize on the AI-driven market momentum while managing risk. Roundhill Investments' Memory ETF has raised over $5 billion, showcasing robust investor confidence in the green energy sector. The substantial capital inflow into green energy indicates a strong belief in the sector's long-term viability, attracting more investors and innovation. Consider diversifying your portfolio with ETFs focused on green energy, as they may offer exposure to high-growth sectors with less individual stock risk. Thank you for watching. FERPA, your financial Sherpa.